Liu Yang is Chief Investment Officer and Chairwoman for Atlantis Investment Management. Did you see it coming, Yang?
Yes.
You did?
I think all the central government looks like they are ready to make a big move. Start with Brazil, India earlier, now China and Australia. It looks to me that a cooperative move to boost the economy, boost the confidence more or less, is on the way.
It's a concerted global effort at the moment, is what you're suggesting. But Ben Bernanke didn't come out and give the goods, did he?
I don't know about him, his view, but his behavior or his action has to be coordinated with the U.S. president election one way or another, and has to move together with China, with the G2 coming to play the big role. But what I gathered purely from a Chinese fund manager's point of view, everybody coming from different way, have their interpretation and the feeling about this. We are at a panic time, okay? Everybody losing money at this market. If you are serious investors, you do lose a lot, okay, this year and following the last quarter of last year. Last quarter of last year, it was the second negative quarter for Hang Seng Index in the last 9 years. Then we follow another quarter loss. So nobody can tolerate anymore. That's the rate it comes.
So I
don't feel surprised, because we have been forecasting this. But you are so right. The timing is everything, right?
Because we get this data tomorrow. We get a load of economic data. I'm also saying, do they know something about specifically what's coming up in the short term? And when I say also, they know something perhaps which is going on in the long term as well. Yes. But what do they see, do you think?
Your guest, your commentaries already said, we all know that is the data coming from China has been bad for a while, for a few months, 2 to 3 months.
Is it?
No, in the historical comparison basis, they are really bad because everything trending down from all the indicators. This is really ugly months, ugly data is coming now at this very moment. That tells us we are experienced the trough of China economic cycles. No matter you admit it or not, so the government tolerance level comes to zero. They try to tell us is we will move, and in a massive way. This policy about monetary policy has been delaying in terms of the economic cycles because we saw the data for 2 or 3 months low, and we saw this is the dip. They haven't moved. What's the reason?
So behind the curve?
Yes. All the central banks behind the curve. I haven't seen anyone ahead of the curve. That's their job. But the way is they send another message to us. They have been panicked now, okay? Because they should continue to do the RRR cuts. RRR only cuts 3 times after 11 times the raises in the past 1 year and a half. Now the interest rates start to move. Secondly, I think the central government has been taking the opportunity. We call that window opportunity. Elsewhere, very ugly. Everything become crisis, So they think, oh, this is the time we do a deregulation. And we tell the market, we know how to use the interest rate, our monetary policy to turn around the economy. They are sending this information to show they are willing to move into a big way. This is the most importantly, right? So secondly, or thirdly, is they want to boost the confidence. We have money, households have money, stay with all the banks. But they don't have the initiative, they don't feel comfortable enough to get the money in or into the stock market.
Okay, Yang, last time we were talking, you were saying, okay, maybe first quarter, second quarter, that's the bottom, that's the trough when it comes to... Are you still buying that, or do you think
I'm still buying that. This quarter very bad, so this quarter is the perfect timing to accumulate China. But I don't see confidence coming from anywhere. I say people de-risking, like a Chinese economy de-stocking. That's not right. You should go the opposite because on all the historical basis, China is extremely cheap. China is still delivering whatever double-digit earnings on average. There are a few sectors still performing, but the point is, where are the monies? They do have money, they hold on, they don't have confidence. More importantly, they don't know where the government leadership to go.
How are they going to get confidence?
Confidence comes from all the government pushing policies. That's why they are doing this now, and also they have to create not only monetary policy environment, but also physical policies. Otherwise, the market wouldn't react, wouldn't feel that the market is going to move up.
Yang, when we look at, of course, it's regime change taking place. Well, not regime, administration change at the head. Okay, now what significance is that? Because I had a guest saying that yesterday, Aaron Boski, that they're just waiting for the new man to come in before everything is thrown, the kitchen sink is thrown there, so he looks like he's coming to save the economy. What do you make of that theory?
We live on hopes, right? This is the basic human being things. So we have big hope, and we do wish the new leaders will do something really good to China and to his nation.
Does it represent a change in policy,
Absolutely.
the new leadership?
He collected all the appraisals, good things, and confidence among everywhere, all the Chinese people, different levels and different parties, left wings and right wings. He has been there waiting to do something good for China, which is, I haven't seen such a situation for so long. So we have to wait. That's why, during the waiting time, a lot of ideas, and especially the hedge funds, they are playing a big game, big role in Hong Kong. Hong Kong allow naked shorts. Hong Kong, a lot of margin calls, a lot of warrants. We're in the drying up liquidity environment. This is something we are really experiencing now. We haven't seen this for so long. The last time my memory was really 2008 financial crisis. This is the worst. You ask all your guests, everybody.
Do you think it's worse now?
This is the worst case in all the Hong Kong history in terms of the confidence and the liquidity. Okay, in the drying up liquidity environment, hedge funds are very happy because there are models. They can gear up, they can do a lot of things, they can benefit from other people's pain, and, they don't need to pay that make a gain. That's the shorting side, okay? We are experiencing that. I've been shorting so much. All my stocks, almost everyone became the target. It's a very interesting scenario.
I wish we could talk more on that. Liu Yang, joining us from Atlantis Investment Management. Just